Hi, this is David Clausen with your weekly S&P and NASDAQ report for February 20th, 2010. And here we have the S&P 500, and I've got a 10-year monthly chart. I always like to start out wide, and we're going to zero in on it. We can see it came down here during the recession. And what has it been doing? Over the last year or so, it's been moving up pretty well, pretty fast in these first 4 months, 1, 2, 3, 4, and then the buying has slowed down. So the buying is still somewhat coming in, but it's slower. So probability states that it probably it could go up, or could do anything. The market can do anything it wants, but maybe don't expect as fast of gains. Let's go to a 5-year chart on a weekly, and we're going to take a look, and we can see that here, fast buying, faster, but it's slowed down. You can see selling here. Let me see. It goes up, sells, and then down here we had this 1, 2, 3 weeks of pullbacks, which is pretty normal. I mean, profit taking from all these buyers down here. They want to lock in some gains and stuff. So we could be range bound. We could be range bound from 1150 to 1050 for a while. So maybe we could expect that. This last week, let me pull up a daily chart. This is a daily 2-year. Look pretty good because you have this gap. Whenever you have gaps or laps up, that's pretty strong. And you can see that they bought from 1080 all the way up to around here, around close to 1100, and we had 4 days up, 1, 2, 3, 4, and it broke over this swing high here. So it looks like we're in an uptrend. It looks like the market tends to want to head up, and I'm going to pull up a 60-day, 60-minute chart, and we can see here it went up. I'm going to zero in on that gap that came in on the 16th. That's usually pretty strong when they pull up a gap. However, let me pull up one thing that's kind of interesting. I'm going to pull up a Fibonacci retracement, and you can see here that we are at the 61.8 Fibonacci. So we may be running into resistance. It's been 4 days up, and so we might want to expect some type of pullback here. So what would that mean to you as a buyer? You may not want to buy on Monday or buy a little less than usual, because 4 days up, then usually there's probably going to be some type of pullback. What's kind of nice though is that if we do get a pullback, you can be a little bit more secure that it's going to be strong, because we went over this resistance here, and we are in an overall uptrend. So if you're a buyer, you may want to wait a few days into this week. Let me go back to the NASDAQ here, not go back, but let me pull that up here. Let's take a look at that. Like I said, I like to go into start off with a 10-year chart, get the long-term perspective, and we can see, here is the crash of the early 2000s from the tech revolution, and then moving up, and then here we are now, kind of the same thing with the S&P moving up. It does look a little bit stronger. I'm going to pull up a 5-year weekly, and we can see here kind of the same thing in the S&P, fast buying, but then slower. And then let's go to I'll pull up a 6-month daily, and we can see this here. What I want to do is show you real quickly how is it comparing, how's the NASDAQ comparing with the S&P 500. And we can see here is that the relative strength, in other words, the NASDAQ is performing well. So if you were going to be a buyer, you may want to look at some tech stocks or some NASDAQ stocks within the NASDAQ 100. But we do have the 5 days up, and we'll probably get the pullback. Let me pull this study off, clear a little bit more room. And I'm going to go into a 60-day, same thing. And we pretty much see a lot of the similarities as in the S&P 500. Strong week, moving up. Broke over a lot of resistance here. We'll probably get a pullback. And on that pullback, you could probably feel pretty confident of a buy because of this strong week. Couple points to point out is that it should hold over this gap. So if we get a pullback, it needs to hold over that gap. In other words, when it gets down to this 2180 level, 2190, the people that missed out on this buying here, you want to see that they are going to come back and buy, or that they want to get in on some of the action and buy. So that's an important level. If you wanted to also look at ahead for possible areas of a pullback, you could put on, I'm going to pull up here a Fibonacci chart, and this won't be so accurate because we don't know if this is going to be the high. This may not be the high. We may go higher, and you may have to put on another Fibonacci chart. But let's say if it does ease its way down, well, we have Fibonacci support here around 2214 and around 2192. This is usually a strong one, 38.2, and then all the way down here to the 0.86. So we probably, if we want an uptrend, we probably want to see it not go too much further below the 2192 and to see it head up. If it doesn't, then maybe it could be heading down, or we'll have it'll trade in a range and it won't go that far. So just to sum up real quickly again, as a speculacio, since it's spies, we are spies. We look out. We had this strong up trend this last week. I probably wouldn't be a buyer here on Monday. Now, keep in mind, I'm not a registered investment advisor, so I'm just a reporter. This is not stock advice. It's just what I see. And please comment if I'll have an area where you can comment on my analysis and add to it and tell me what you think. But I probably wouldn't be a buyer around here on Monday. I would wait for a pullback, or like I said, if I do want to buy, if I had a great stock, looks like a breakout, I buy maybe just a little bit, maybe do half of what I normally would, or 60%, or whatever works in your risk parameters and stuff. So that's the analysis, what I see for this week. I would love your commentaries. Anything you can add or disagree with or anything else, I'll have a link on this page so you can tell me where I'm wrong or right or whatever else. Well, thanks for watching, and I hope you learned a little bit, and take care. Bye-bye.